Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is the Chief Executive Officer of Treasury Consulting LLP. And today we are going to covering second video, the similar video which we done just earlier. This is going to be a little short video because everything we have explained in the earlier videos. Now, for those who are referring this video first, which is sterilization appreciating rupee, we requesting them to please watch our earlier videos, which is sterilization depreciating rupee. This would help them. Now in this the similar case would happen. Now here we assume that INR is appreciating. Suppose it moved up. Now it went to say 65, which is not possible, but still we assume that INR is appreciating. It went to 65. We all understand that what is the scene of Indian IT industry. Indian IT industry already issued warning on the very first day of the year when the employees went to their office. They were expecting some kind of wishes from their bosses, and their bosses issued a warning that 2017 would be a year, either make or break year for Indian IT industry. You know that there is a visa issues which are going on. There are a lot of taxation issues which are going on. So, and 2017 is anyway is a dollar bull year, and so it's not going to be good for Indian IT industry, to be honest, right? Now in this, suppose INR went to 65. This is a boom for importers, but a bane for exporters, which is especially IT. Because in the current account of Government of India, you have one important thing which is invisibles. Now this invisibles is predominantly on account of the software earnings do you have, and also on account of I would say the repatriation, which is nothing but FCNR, which Mr. Raghuram Rajan exploited, right, which we have. Now in this you would have similar two desk, RBI foreign exchange desk, and you have RBI FX reserve. Now rupee is appreciating. You need to play a balancing role here. You need to support your importer and also your importer. So what would you do? You will go to FX reserve and you will buy dollars. Now of course, as I already told that every central bank would have a different sterilization model. So RBI predominantly believe in buying dollars on spot and selling on the forward because of the time value of the money. This is something which I saw. So they always buy on spot. However, they always sold on in forward, because if you buy on forward, then you need to pay time value of money, and this would impact the net of monetization of the national debt of Reserve Bank of India. So to save this net off, what they do, they always buy on spot. Now if they buy on spot, this will automatically increase the FX reserves of this country. Now FX reserves of this country will increase, then NIEP, which is the difference between FX reserves minus FX liability, this would surely move up. This would surely move up. But the point is, where is the money? From where RBI will get the money? We are discussing sterilization like a Subarao, because Subarao believe in the full sterilization model. We already told in the very first video that this is the full sterilization model. Now, if RBI would get this sterilization, if they need the money, from where they will get the money? The money they will get in Reserve Bank of India. They will call their counterpart, which is Reserve Bank of India fixed income desk, and they will issue bonds. I mentioned bonds. It could be bills, notes, bonds, cash management bill, and SLR securities. Again, there are two things in this. Unfortunately, we tend to believe that RBI is acting as a money manager for Government of India. I'm not saying this is wrong. This is not absolutely right also. It also acts as a money manager for themselves also. So RBI is also money manager for Reserve Bank of India. They have their own FX book. They have their own INR book. That is why they are creating the monetization of the national debt, which in turn give the dividend of more than 66,000 crores to Reserve Bank of India every year. Believe me, this is not a small amount. 66,000 crore every year as a dividend which they are generating, which is known as monetization of the national debt. This is absolutely not a small amount. As simple as that. Now, this will surely, because if you issue bonds or simply if you issue securities, this will surely increase the INR liability of Reserve Bank of India, and plus, of course, this would increase the interest liability. Please don't forget that Indian Indian primary deficit, which is net of revenue from expenditure, which includes your interest payment from Government of India, which Government of India is paying because of all the outstanding debt they do have. I think majority, if I'm not wrong, although I do not have the data, exact data, but as far as the media report is concerned, Majority of the primary account deficit is on account of the interest payments which the government is paying to the outstanding debt of this country, and this is very high. Another important fact is that since India do not have a floating structure like TIPS, Treasury Inflation Protected Securities, is absolutely zero. Inflation index bonds, this is absolutely zero. Since we do not have TIPS in place, and since we do not have a floating mechanism in place, MIBOR linked bonds is not there. Since we do not have that, so then what would happen in that sense? You end up paying the fixed rate. If market is going down, you paying the fixed rate. Like, take an example. There are few securities of Reserve Bank of India who still paying 9.5% as an interest rate. On the other hand, today 10-year GSEC is roughly 6.4. So which is approximately a spread of 3%. However, if you would have a spread, if you would have a float in these securities, you would have paying roughly between 6 to 6.5%. But today, what are you paying? You're paying 9.5% because this is a fix and you cannot mature them. So they are always in the money. The people, those who hold that, they are always in the money because the yield is very high. Whatever the coupon which they are earning is very high and the yield is absolutely low. So their principal must be on the very top. Against every 100 of principal, there must be roughly 105 or 106, right? So it's allowed that happen. I repeat, you have a FX desk, Rupee is appreciating, RBI needs to play a balancing role. They will go to Reserve Bank of India FX reserve, they will buy FX reserve. In buying FX reserve, they always do on the spot basis because they are not interested in paying time value of money, which is the premium. They are reluctant doing the forward contract, and who would do it is the NATS. NATS stands for nationalized banks. They will do that. Now they will move to they will issue the instruction to their counterpart, which is Reserve Bank of India fixed income desk. They will issue the securities, which is treasury bill, treasury notes, bonds and others. In this would inflate the position of the country as well as some book which they themselves maintain, which in further term would increase the primary deficit of this country. And this complete cycle is under LAF, Liquidity Adjustment Fund, which is which the complete process, which is leg 1 and leg 2, this covers sterilization. So this is the complete game of sterilization which we explained to you both ways: sterilization depreciating rupee and sterilization appreciating rupee. And with due respect, if you like this video, please don't forget to subscribe our channel, and also don't forget to mention a good comment about the video on the YouTube. And you're most welcome to connect with me. Our website is www.treasuryconsulting.in, and our mobile is 9899242978, and my Skype ID is Rahul5327. My contact is rahul.magan@treasuryconsulting.in. Repeat, rahul.magan@treasuryconsulting.in. We are very pleased to share that we are also coming up with ISO certifications. I think by end of January we will start with the trainings of ISO, whereby we would be covering ISO 31000, which is risk management, and ISO 37001, which is anti-bribery compliance. And our online academy, which is Treasury Consulting Online Academy, is doing a lot of training programs. So we have our online system. We offer a lot of courses. You are most welcome to join the course. You are welcome to write to us for the course. And our monthly magazine, which covers banking, treasury, foreign exchange and all. This monthly magazine is we are issuing by end of this week, max to max by Friday. You would have that. So thank you very much and have a good luck.